I think first of all you need to understand what a balance sheet is. And a balance sheet is a statement of the assets, liabilities and capital of a company at a point in time. The balance sheet also is a very important document that forms part of the monthly management accounts of the company, and it is relied on by management, bankers and lenders to assess the financial situation of the company, and that is why it is so important. To ensure that the balance sheet is correct, it is therefore absolutely essential that the balance sheet items are reconciled on a monthly basis, both to the books and records of the company and to external third-party evidence to make sure they are correct. If the balance sheet is not correct, it could result in management making decisions about the business of the company based on the incorrect information, which could result in a financial loss to the company.
Performing a reconciliation, you can't do the same reconciliation on each account. Each account is different. For example, your inventory, you have to agree the information in your inventory to your inventory stock sheets or your stock count sheets. For accruals, you would have to agree to the last invoice in the month to ensure that this is actually what I owe to the company. For prepayments, you would agree to the bank statement as well to make sure that it applies to the next financial year and not this year. Reconciliations are best done on a month-on-month basis. If you see that a reconciling item has not cleared in about 3 or more months, it is always best to investigate whether that amount should still be in there or whether it indicates fraud or theft.
A reconciliation of, for example, accounts receivable or debtors could identify situations where specific debtors accounts are reducing when in fact cash or payments have not been received by the debtor. This would highlight either incorrect accounting or possibly fraudulent transactions, both of which could result in a financial loss to the company. An example under accounts payable and the reconciliation of accounts payable could be that if detailed reconciliations are done, they would identify problems such as that the payments do not agree to the amount owed, and it could also highlight situations where interest and penalties could be charged because of late payment. And in both cases like that, again, it could result in a financial loss to the company.
Reconciliations can identify problems, for example, with inventory. It's always best to do a stock count on a period basis that is quarterly, bi-monthly, or monthly basis to ensure that your stock items are in place. You can always identify whether there's theft in your company or whether there's just misplacement of your stock items. Another example would be payroll. It's always best to maintain monthly payroll reconciliations and making sure that they agree to your medical aid, pension fund, and provident fund statements. With regards to medical aid, you always want to make sure that you do not short pay medical aid, as this can affect the employee when they need to claim. With regards to pension and provident fund, you always need to make sure that the amount in the balance sheet agrees to the amount in the statement. As they are tax deductible, they could have a tax consequence on the employee.